for years. The so-called gurus have taught that knowing how to read a chart is the key to making money in trading. But what if that's completely wrong? 90% of traders fail. But this guy right here has managed to beat the odds for over 20 years now. And he says that the secret isn't in your strategy, it's how you think. Is he right? Is he wrong? Is this just another trading lie? Today, we're going to break down Tom Hugar's most controversial insights. Let's dive in to the secret mind tricks of a trading legend.
The argument here is that normal thinking doesn't lead to profitable trading. I want to tell you why I believe that. How did I come to have that belief system? Well, it started 21 years ago. I was 3 days into my new job at a brokerage called Financial Spreads. And I was invited to accompany the best clients of the brokerage and the directors out to a day on the race course, on the race horses. The ladies are wearing funny hats and the gentlemen are drinking champagne and smoking cigars. So there I was, and the CEO of the company, he had introduced me as their newest recruit. And then this is the funny bit, at least I think it's funny. He's saying, he knows charts, as if knowing about chart analysis was some kind of novelty back then. But it was, because back then, 21 years ago, the trading platforms had no charts. When I worked at City Index, there were no charts. So there I was on board this executive coach, and I was being introduced as the person who knew about chart analysis. The first person that just sit down in front of me was a gentleman who owned a string of pharmacies up in north of England. And he said to me, could you please analyze this chart here? And I looked at it, or I remember it. And it was a company called Marconi. Now, what's interesting about Marconi was that it had been a bit of a darling in the FTSE 100 index, but it had fallen.
Okay, so what do we see here? We see an uptrend. We see a trend line break, right? Because if you connect the lows and the higher lows, that would make the trend line here. So then we're breaking the trend line here. Then we're coming back up to test the high. We're getting slightly above the prior high. And then we're getting a bear breakout to the downside, showing a double top. See, one top here and one top here. And then we're seeing a strong downtrend with some small pullbacks, tanking this all the way to the bottom.
From grace, from a price of about £12, 1,200 pence, down to, at this point when I spoke to this gentleman, was trading around 300 pence. The story of Marconi, actually, eventually it went bust. It went to zero. Now, but what's interesting here was that this gentleman had bought a little bit when it had retracted off the highs, because he was thinking it was getting quite cheap.
Wow.
Then he added to his position down here, and then he added to his position down here, here, and here, and here, because as he said, this has got to be the cheapest company I've ever come across. Now, at the time, I wasn't able to formulate my opinion as I was later, but essentially it was the first time I ever came across an individual who was not trading or investing on the merit of what he was seeing in the market, but what he was actually believing. And he had the misguided notion that a stock that had fallen a lot in price was cheap.
Okay, now this is regular thinking, right? Remember his argument. Regular thinking doesn't win in trading. That's his argument. That's what he's going to try and convince us of in this video. And this is regular thinking, right? Because normally when the price goes down, things are on sale and you're like, hey, I got a deal. And he's going to argue that that thinking will be a disaster in trading. So let's keep listening.
But as I said at the time, I wasn't able to verbalize what I know to be true today. It was to be a few years before I got my next lesson about mass psychology. It was the study that I've spoken about many times by now, from Rodriguez from FXCM, who, together with his staff at FXCM, had analyzed 25,000 of their clients' behavior over a 15-month period.
Wow.
Where they executed 43 million trades in FX.
Wow.
Now, what was interesting about it was that the outcome of this actually revealed that their clients were very good at identifying winning, very good at identifying winning, shall we say, trading setups. But the
65% win rate.
problem that they had was that when they won, well, they won decent, but they lost a whole lot more than they won.
Okay, and I'm always talking about this on the channel, right? You want to combine your win rate with your average size of your winner and the average size of your loser. And see what you can notice here. If you can do some quick math, notice that the average winners 42 and the average losers 82. Okay, so the average loser is like twice the size of the average winner. I mean, if you looked at a strategy and 65% of the time you won, you'd think that's good, but this is actually not good at all.
And so even though they had a very high success rate on their profitable trades, overall they were net losers. Now at that point, I had been exposed to the behavior of the clients of City Index, and I've become acutely aware how frequent it was that people would be betting against the trend on any given day. So for example, if the Dow was marching up the page, clients would like to sell short. And if it was falling, you could be absolutely certain that they would want to try and buy the Dow. And sort of armed with that knowledge, I began a journey of, shall we say, self-discovery. I also became much more mindful of what it was that the brokers all over the world were doing to their clients.
So the question to ask yourself is, what is the size of your average winner? And what is the size of your average loser? And if the size of your average loser is bigger than the size of your average winner, you likely have a problem with your trading, and you want to listen very closely to this.
So for example, any given broker, this is from Pepperstone's web seminar section of their educational, on their educational area. When you look at it, it's all about, well, how to read candle charts, how to identify trading opportunities, how to figure out gaps and slippage, and how you can day trade Forex. And whilst there's absolutely a place for this, there is a place for, shall we say, learning about the basics of trading. It seems now that we seem to have proverbially put the cart before the horse, and all the focus is now on technical analysis as if this is going to make us better. So I became much more mindful of that. Even though brokers meant well and educators meant well, all their focus was on the wrong thing. This is not new. I mean, this goes back, this chart here is from 90 years ago, and this is from a course that a gentleman called W.D. Gann sold. And back then, I think it cost the equivalent of the annual salary of a typical worker.
So this is like 100 years ago. Wow.
And there's so many lines and so many dates, and he sold his courses through the narrative of America that to some extent was religious. He sold his courses on the premise that he had found a code in the Bible. And what's so puzzling is that even now, many, many years later, you still have people who rave on about how great Gann is and how much money they are able or could make from knowing about fractals of 8th and 2/8 and 5/8, and the moon has gone retrograde Mercury and Venus is up Uranus and so forth. And it's actually frightening.
Okay, so this is a chart from 100 years ago. And this is a guy, he's talking about a guy who was selling a course on how to use a secret code that he found from the Bible to trade this chart. And he's showing all these crazy lies. And this guy's just illustrating how ridiculous that is, because there's people that still believe in that BS.
That there are still people able to sell this bullshit, but they are, because it is appealing to a part of our brain that goes, well, if it sounds complicated, it must be it must be worthwhile.
If it sounds complicated, then it must be worthwhile. Now, that's a question to ask yourself. Can you believe in a strategy that is simple? Could it be possible for your brain to entertain the idea that a simple strategy, if applied consistently to the charts, could result in consistent profitability? Or does your brain go, nope, it has to be complicated?
Learning about. Now, when you look at how far
Because this is complicated as hell, right? And this is obviously nonsense. I mean, look at that.
we have come over the last 20 years from when I started trading, it is mind-boggling how much more advantageous it is today compared to, say...
Remember, I told you this guy's been trading for 20 years, okay? So this is his observations after 20 years of trading.
25 years ago. When we day traded the Dow 25 years ago, we were paying an 8-point spread in the Dow. That meant that if you bought the Dow, it had to move 8 points in your favor before you were at break even. So spreads have come down significantly. Knowledge sharing, like what we're doing in Telegram right now, is at an all-time high. It's never been so readily available. Markets are practically trading at your disposal 24 hours a day. You have charts on your mobile phones. Historical backtesting is available to us. And through, we have never been as informed about trading as we are today. Yet when all that is said and done, we're still operating with a failure rate of around 76 to 80%. And as I jokingly said, if that was a dentist school that had a 76% failure rate, you would have to question the teacher's methodologies. Yet, and say this was a school where you're contemplating sending your daughter or your son. 1 second. Okay. And so if this was a school where you're contemplating sending your child, your boy, your girl, and they had a failure rate around in the 70s and 80s, you wouldn't send them there. You go, no, there has to be another way.
Yeah, great. So would you send your kids to a school where they failed 80% of the students? No, hell no, right? That's trading.
And what?
So what does that mean? Does that mean that the way most people are teaching trading is ineffective? Something to consider.
I am proposing is, what is the other way? Because if normal thinking and normal behavior doesn't lead to profitable trading, the obvious question begs, what does?
Okay, so that's the question. What kind of thinking does lead to profitable trading?
So I wrote a book, as you know, which isn't a book about technical analysis, but it's all about how we as traders go about trading, which is the wrong way around. So there's a little audience.
By the way, I highly recommend this book. If you haven't read it, get it.
Question time. How important is the right mindset in trading? Well, this was a question that Steve Ward asked at the symposium early on this year.
Pop quiz. Put it in the chat. Put it in the comments right now. How important do you think the right mindset is in trading? From 0 to 100%, how important do you think it is?
And it was an interesting question because people sort of started to chip up. Well, I think successful trading is 90% strategy and 10% mindset. And other people were saying, well, it's important to have the right strategy, but it's also important to be able to follow the strategy, and that comes down to mindset. So by general consensus, we sort of landed at a 75%. That's how important mindset is. So if mindset is so truly important and we can't actually make our way to profit through the use of techniques alone, then it does beg the question, well, why is everyone focusing on technique? See, most trading techniques will at best have a 65% chance of success. So a little more than a coin flip chance of 50-50. But if...
Now, did you know that? Did you know that most trading strategies will have at best a 65% chance of success? Which is only slightly more than a coin toss. Think about that.
That's the case. Why do 90% of people lose? 90% of people don't lose on a coin flip game.
Yeah, right. So if 90% of traders lose, you'd have better odds just flipping a coin and then clicking a button randomly. So what is the difference there? What is causing the 90% to lose?
So when you when you travel the internet and you frequent yourself with bulletin boards and newsletters and the likes, you will be subjected to the how of trading. The how do I use a moving average? How do I use candlesticks? How do I trade the Dow? How do I trade the DAX, the FTSE, and so forth? All the focus is on techniques. It could be product knowledge. It could be knowledge about money management, etc., which all are important things. But there's absolutely no focus on what are you going to do when you're just about to self-sabotage for the team time. How do I deal with not taking the trades when I fundamentally know I should be taking them? How do I take a loss when I simply can't get myself to do it? How do I execute a trade that I know I really should be executing?
How do you avoid over trading? How do you break yourself away and stop trading when you see yourself over trading? How do you stop revenge trading? How do you take a loss and not let it throw you off your game?
And so what I wanted this web seminar to be about, and the one in London, is why do we focus all our mental energy on strategies and entries, when in reality, you should spend time on analyzing your psychological weaknesses.
Boom. Okay, so that's a mic drop right there. Do you even know your psychological weaknesses? Do you? Do you know the things that hurt you in your trading that have to do with your psychology? Now, I want to offer you an easy way to answer that question, because that's an enormously difficult question to answer, because these are things that are largely unconscious. They're things that you're largely unaware of, because who wants to think about their weaknesses? We don't like to think about that stuff, so we don't. In fact, we avoid thinking about them and repress them so that we're not even aware of them at all most of the time. And an easy shortcut here is to go to something called 16personalities.com, 16personalities.com, and to take that personality test, answer those questions. It'll take you like 3 or 4 minutes, and it'll tell you what your weaknesses are. And then if you really want to get crazy with it, go into ChatGPT, say my personality type is, and then enter those 4 letters, because that's what the test will give you. It'll give you 4 letters. Take those 4 letters, pop them into ChatGPT, and then say, this is my personality type. What are my weaknesses in trading, and how can I work on them?
What's your weak game? So the foundation of successful trading to me is technique. There has to be a foundation of it called technique. But once you master that technique, of course you can improve. But I think it's much more important that you actually begin to learn about your weaknesses, which come down to your behavior.
Okay, so this is interesting, because it's saying that your mindset or your behavior, right, is the actual baseline, right? So this is the bottom of the pyramid, and then at the top of the pyramid is the technique. So he's pointing out that technique is like the icing on the cake, but the foundation is your mindset and your behavior that holds up your technique. Think about that.
And your process. So I argue that getting to know yourself makes you a better trader. It makes you a better person, but it also makes you a better trader. And I'll give you an example of this. So here's the FTSE, and we are seeing a market rallying, but right down here, where the laser pointer is right now, we're witnessing the market has made a low below the highest bar of the day.
Okay, so highest bar of the day is here, and the price has gone down here. We've got 2 consecutive bear bars, the second one closing below both this candle and this candle.
So the highest bar of the day is this bar that we're seeing here, and we have now closed below the low of the highest bar. And especially when this is in the context of a double top, this is a reliable sell signal. So I'm selling short right here in the FTSE. And, you know, it is what it is. Maybe it'll go well, maybe it won't. And then what happens is that the market then makes a push above, at which point I'm going, oh, this is not looking good. But then it comes all the way back down again, at which point I'm thinking, it's all good. It's going to go back down to the lows again. But then what happens over the subsequent bars, actually, let me just pause for a second, because I think this is important. So what you're seeing here is Rafa Nadal and Roger Federer headed out to center court for one of their epic battles. It could have been the one in 2007, Could have been the one in 2008. But it's not actually those two I want you to look at. What I want you to look at is this. See, this is a quote from an author called Rudy Kipling, and the poem is called If. If you can meet with triumph and disaster and treat those two imposters just the same, then you shall be a success, if you can do that. He wrote it to his son or sons. And what I took away from that is what he was trying to tell his sons is, go through life with a degree of humility. Don't be too excited when you win, and don't get too despondent when you lose.
I love that. It's saying that winning and losing are both imposters. That's so good.
Because those are just emotions, and those emotions are just like a candle in the wind. It's not sustainable. But what is sustainable is how you go about your daily life and your process. And so the imposter of success, or triumph as he calls it, disaster, well, they're just emotions, but they will detract you from the real journey, which is the journey of being able to follow a process. So
following a process. Okay, this is going to be a key theme here in this video as we move forward. That's worth writing down. The key is following a process, or learning how to follow a process.
When we move on to this, and we see here that the FTSE over the ensuing 2 bars are making a high above that candle, which we saw here. I am beginning to think I'm not in the right position now.
Okay, so he got short here, and he's saying the market pretty much went against him almost immediately, right? If he got short here, that means there was one little teeny tiny doji that went in his favor, and then he got 1, 2, 3, 4 candles in the opposite direction, and arguably his stop is probably up here somewhere. So he's now questioning his position. Yeah, right, because his stop was probably here, right?
Yeah, above the higher higher of the day. Okay, tough luck and a lot of trade, but that's not quite how I see it. The way I see it is, what can I learn from this? Is there a lesson that I have missed here?
Okay, boom. This is the difference between the amateurs and the professionals. When the amateurs lose, they get really upset and they try and forget about it. When the professionals win, they ponder and they look for the lesson. Which one are you?
Should I have done something different? So when I highlight what's going over here, up here, what I pay close attention to is this candle here, this long candle here, because the market had closed below the low of the highest bar, which to me was a sell signal. Then we get a push higher, which goes all the way back down here. And in my book, this market should have continued lower, but it didn't. Instead, it rallied. And I began to go through the days and the weeks and the months and the years before that, going, hey, is this something that happens frequently? Because if it is, I want to know about it. This is something that I want to learn from. Learning from failure is something that very few people engage in. But my role model is a gentleman called Kobe Bryant. I am in awe of Kobe, and rest in peace. When Kobe Bryant died earlier,
legend.
He was the attention of many journalists all over the world. And they were talking about how an amazing basketball player he was for the Lakers. They were talking about all the records that he broke, how many times he made the NBA, etc., etc. But it took a journalist from the Guardian newspaper called Andy Bull, and he was talking about a different vantage. He was addressing Kobe Bryant from a different vantage point. He was addressing it from his failure rate. See, it turned out that Kobe Bryant, he racked up 14,481 missed shots during his career. Well over more than 1,000 than the second player on the list.
Wow.
And so...
Okay, so just think about that for a second. Kobe Bryant, right? One of the greatest NBA players in history, one of the greatest athletes of all time, had well over 1,000 more missed shots than this number 2 player on the list. That's incredible.
The journalist concluded that actually Bryant's success story began with working to conquer the fear of failure.
Wow, very interesting.
You see, on this previous trade that I just executed, it was so easy to just dismiss it as, oh, well, nothing to learn. It was just another losing trade.
Okay, so I want to ask you guys again. Put this in the comments right now. Which one are you? Are you the person that went and be honest with me so that you can be honest with yourself? Because this question isn't for me. This question is for you. Tell me right now in the comments, are you the kind of person that when you lose, you look for the lesson or you try and forget about it?
Differently. And I believe that that's a mindset thing, that much of our progress as a species and as individuals comes from our setbacks, that we learn from our setbacks. Therefore, our relationship with setbacks is highly correlated with our position in the food chain, both in society and within the hierarchy of our work, within the hierarchy of employment, maybe on our social status. Do we treat setbacks as just that, a step back with no lesson? Or do we learn what is needed to be learned? If anything, did we appear a little wiser the next time a similar situation appears? So when I look at this setup here, as benign as it may appear to you, it actually turns out that this is something that happened quite frequently. Market closed below prior bar's low, and it looked as if, oh, it's going to fail here, and then it marched higher. Right? I got a market that is close to closing below prior bar's low. It looks as if we are headed lower, and boom, high again. Market makes a retracement of 3 or 4 bars, closes below prior bar's low, and up here it looks as if market is headed back down again because we got to push higher, and then we're closing all the way down, and yet the market somehow managed to find the strength.
And one of the rules that I'm always talking about, compliments of Al Brooks, is if you're going to trade against a strong trend, or really if you're wanting to trade against the trend ever, it's better to wait for 2 things. So use this very simple rule to help avoid losses. Wait for 1, a break of the trend line, and 2, a retest of the high or the low. So in this case, if you're trying to short here, right? So you are thinking this is going down, so you're going to short here after this bear close instead of shorting here, because this is essentially the trend line. So connect the lows to the next higher low, to the next higher low, to the next higher low. Okay, so we can connect a line right here. So once you get a break of the trend line, so this would be the first break of the trend line because the line would be like right here. So that's the first break. So that's criteria number 1. Then criteria number 2 is a retest of the highs. So now we're coming up to retest this prior high. But look at what happened. As soon as we went up to test this high, boom, the bulls got a huge breakout to the upside. So if you followed that rule, then you would not have lost this trade. And it's a good rule for any time you're thinking of trading against the trend.
So I began to think, no, there's something I need to learn here. And I went through years and years of this particular pattern, just looking for this particular pattern, so that I may be 100% prepared for it the next time it was to happen. And then, I'm just use a couple of more examples of this. And then something really interesting happened. I was trading the FTSE in an evening not long ago, here in November. And I executed 2 trades in the FTSE at £300 a point at 7,362. Now, what's interesting about it was that it looked to me as if the market is double topped, trending lower, and this is just a retracement. But then what occurred to me was, as I had executed the trade, it occurred to me, hang on, what is this thing that I'm seeing right here? And it turns out that that's the exact same pattern that I had done so much research on, and it just slipped under the radar. And I saw it, and I go, wow, I shouldn't be short here at all. I should be long. This is a mistake to be short here. Had I not done those hundreds of hours of research in this pattern, that lesson may have slipped me. But instead, I took my lost about £4,500, £5,000, and it was in the trade for only 3 minutes or so. And then
Okay, so imagine losing 5,000 in 3 minutes. In 3 minutes.
very quickly reversed long. Now I know what you're thinking. You're saying, yeah, anybody can say that. So I'd like to prove it to you. Here's my track record. Here's the trades. Here you see, I'm trading. This is 70.
This is why I like this guy, because he shows his trades. He shows his actual trade, so you know that he's for real.
Buying it, 300, another 300, another 300, another 300, another 200. So I'm about 11, 1,200 pounds a point. Now, not all of the trades are held all the way, but eventually the market did grind up, and the best trades were the one that I executed near the highs of the day. I didn't make back everything that I'd lost, but I made 90% back what I lost. And I came out of that trading session thinking, thank you, Kobe Bryant. Thank you for teaching the lesson of setbacks. Because had I not been inspired by you, and had I not done the work on this particular pattern because I was annoyed that I'd lost back then, I would never have gotten a lesson. And I hadn't gotten a lesson, well, I may have been inclined to hold on to this trade a lot longer than I should, but I didn't.
And that's the key takeaway. Okay, so that's what I'm taking away. You tell me in the comments what you're taking away from this lesson right now, because this is definitely so far the most powerful point of this video. This guy is saying that he got over being annoyed, because who loves losing? No one loves losing, okay? But he got over the annoyance, and he went back and researched years of data, learned something, then get this, still messed it up. He still messed it up, right? He still got short here. But then he goes, oh yeah, this is the pattern that I researched, reversed his position to long, and made up for the loss almost entirely, which is awesome. So I want you to tell me right now in the comments, what are you taking away from this lesson? Because this is a very powerful example of exactly the kind of challenges that you face when you actually start to trade. Now, I'm not talking about thinking about trading or learning about trading on YouTube. I'm talking about actual trading. This is what you're going to be faced with every step of the way, is challenges like this. So tell me in the comments right now, what are you learning from this?
Look, the loss. I moved on, and while this is not entirely a success story in that sense that I made everything back, well, I made most of it back. And that to me seems like a victory, and also an enforcement, a reinforcement of the right kind of behavior. So the solution, as I call it, part one, is review and discover. Review your old trades, because in there lies an acre of diamonds, invaluable lessons for you to learn from. But it leads me something different. It leads me something to the next point, and that is it even possible to practice trading?
Great question.
What I call deliberate practice. And it turns out that I have found a way, and I'd like to discuss that with you. The person you're seeing over here to the left, lady, could you shut the fuck up? Some of us are trying to work, or you're yip-yapping away. Be respectful. This person that you're seeing here is a gentleman called Malcolm Gladwell. He wrote a book called Outlier. Yeah, fuck off. He wrote a book called Outlier. And Outlier...
Great book. If you haven't read it, highly recommended. The book called Outliers by Malcolm Gladwell. But he's going to reveal a lie about that book here. So listen closely.
Suggested that if we do something for 10,000 hours, we are going to be experts. It's essentially the difference between average performers and high performers is that they have practiced a whole lot longer than the average performers.
Have you guys heard that before? Tell me in the comments right now if you've heard that before. That 10,000 hours of practice is the difference between average performers and high performers.
And I read that, and I probably swallowed it hook, line, and sinker. But there was something about it that didn't resonate with me. And I based that on my own driving. I have been driving for, 30 years. And then I was invited on my birthday to a race course where I put myself into one of those performance cars. I think it was a Mercedes-Benz GT S version. And I had a driver who basically said, do this, do that. So I was driving, and I realized that while I think of myself as a pretty good driver as I'm racing down the motorway, the Autobahn, actually, that's not driving. That's just cruising straight ahead. If you want to improve, you really got to give your mind a challenge to solve, because the challenge for a mind is not there if you're just doing what you always do. And it reminds me of, let me just go to this one here. I was watching Wimbledon a while ago, and there was a commentator who was passing comment on one of the tennis players. And he said, oh, well, practice makes perfect. And then Tim Henman, who's a bit of a legend within the English trading, that's the English tennis community, he said, no, practice does not make perfect. Practice makes permanent. What does make perfect is perfect practice, which was something Vince Lombardi was out. And he's an American football coach who gained an incredible notoriety for his performance and what he was able to bring out in his players. So we go back to Malcolm Gladwell, and the gentleman to the right of Malcolm Gladwell is actually the architect of the research. And his name is Anders Ericsson. He's a Swedish researcher who works at an American university. He was the original proponent of the 10,000 hour rule. But as he stated in an interview, look, I never said that if you practice something for 10,000 hours, you become an expert. What you need to do is you need to create what I call deliberate practice. And the way to create deliberate practice, for example, in the context of trading, is that you set yourself a specific challenge, because your brain is a problem-solving mechanism. And if you just say, I'm just going to study charts, you're not going to learn anything.
Another book recommendation here that goes into this in detail is called Talent is Overrated. It's a book called Talent is Overrated, and it goes into incredible detail on what deliberate practice actually is. I highly recommend that if you're invested in becoming wildly successful at trading.
Because your mind is just going to glance over what is always glanced over. But if you say to yourself, I am going to find out all the single times that the FTSE makes that pattern that I just showed you, and then I'm going to document it, I'm catalog it, and then the next time I see it, I'm going to trade it. And so what Anders Ericsson basically said was that the people that he had researched, the violinists, the pianists, the athletes, they only become experts because their coaches had set them specific challenging tasks that they had to solve. So it wasn't just a question of doing the same serve over and over. Instead, it was about doing the same serve, trying to land it in a particular challenging part of the court, for example, or that your fingers had to learn a very specific, deliberate sequence to play the violin. That's how you improve, by actually tasking yourself with a very, very specific sort of behavior in order to uncover a new behavior. And what in turn that does is build neural networks. Now, ladies and gentlemen, now perhaps you understand why I like to get my sleep and why I make sure that I exercise and I eat well, because this kind of behavior takes an inordinate amount of energy. Living consciously takes an inordinate amount of energy. And so what Ericsson basically said was, Malcolm Gladwell, you got it wrong. It's not about doing something for 10,000 hours. It's about doing it deliberately and truly, truly challenging yourself. Now, how can we do that as when we don't have coaches? And I remember my ex, who was an exquisite ballerina, she was teaching me about the Swan Lake. And within the Swan Lake, which has been dazzled audiences for decades, she's talking about that there's a sequence called the fauteuil. It's the 32 spins on your foot without putting the other foot down. And it's this constant balancing act without getting dizzy. And she said, look, you don't go in and you start balancing. You don't start balancing for 32 fauteuils. You do them one little bit at a time, and you build up a big picture until you can begin to actually do this flat-footed. And then once you've done it flat-footed, then you begin to go up on your toe for 1 or 2, and you go back down there, and then 2, 3, and 4, and so forth. And this particular sequence in the Swan Lake has been the bane of ballerinas for more than a century. And those who have mastered it, they didn't just go in and go, yeah, I'll just keep practicing it. No, they set themselves small, deliberate tasks and then solved it one piece of the puzzle at a time. So I have split my trading training into different categories.
Okay, so here we go. I've split my training into different categories. This is amazing. Specific improvement, technical improvement, physical maintenance, mental improvement, mental maintenance. That's worth screenshotting.
And I must admit, I've also split many other things in my life into different kind of categories. So I'll call the first one specific improvement. And so the specific improvement is, say, I feel that I wasn't good at trading trend dating days. So I found all the trend days I could find that happened on a Friday, for example. And I began to make notes on, well, how am I going to trade these on a Friday? How do you actually trade a strongly trending day, especially when it's a positive day, which seemed to be...
I'll tell you how I do it. You buy the low of any bar, really, okay? But especially a bear bar, right? Because usually the price is not going to go below the prior bar. But if you have a bear bar, the price will go below. So if you see a bear bar and you buy below that bear bar, right, then you would have gotten filled here, okay? If you see this bear bar and you put your order below, then you would have gotten filled here right before the price reversed. If you see this bear bar and you put your order down here, you would not have gotten filled, okay? But more often than not, that's going to be a solid strategy only for strongly trending markets.
Be my Achilles. How do you do it? How do you actually go about doing that? Navigating around your fears of being being the one that's buying the high tick of the day, and going through these exercises day by day, hundreds of them, I was able to actually come up with strategies that enable to say, you know what, I am going to do this, and the way I'm going to do it is by, fill in the blanks, because I don't want to deprive you of your own research. Let's take another example. Let's take FOMC trading. Not so long ago, we had the FOMC, and I served you an 80-point winner, which took us about a minute and a half, and bang. But what you don't know, that there was hundreds of hours of research gone into that particular sequence of events on that particular day. I had taken every FOMC event that I could.
Hundreds of hours of research. How many hours do you spend backtesting? How many? Is it hundreds of hours? Is it hundreds of hours?
Find over the last 10 years. And I had meticulously gone through every single one of them, finding out how do you successfully trade FOMC. And I came up with a trading pattern that I call the rule of 4. Again, I'm not going to deprive you of your own research, but the rule of 4 has been something that you have been subjected to, probably without even knowing it. You just heard me say, we're shorting the DAX here, or we're shorting the Dow here, or whatever it may be. But going through every single one of these FOMCs, I found a way to successfully navigate this particular and oftentimes very difficult market to trade. That was my mind being tasked with a very specific exercise, being how do you trade FOMC? When you look at the school run, same story. How do you trade the DAX successfully in the morning? And whilst not everything that I do is turned into gold, for example, I charted the S&P 500 against the tide in the Hudson River, which turned out to be an absolute dud. It just does go to show that I set my mind a specific task, and then I went about to solve it. Now, what I also need to remind my brain of is don't be complacent, because you know what? You have a tendency to do the wrong thing at the wrong time. So I need to show my mind, my brain, what can go wrong if I don't excel in the right kind of behavior. So what you're seeing me doing here a while ago, 9 years to be exact, I went long the FTSE at 6,064. And then I bought some more at 56. And the market went down, and I bought some more at 35, and I bought again at 25. And then in the end, I closed the whole thing, and I lost 17,000 pounds. Do you think that's good?
17,000 pounds lost.
Trading? I don't. It's awful trading. And that is the point that I need to remind my brain of periodically. Because you have to be the master of your own kingdom, but you also need to acknowledge that your mind has at its core function to enable you to forget pain.
Okay, so I just want to underline something. One of his strategies, which we can all take something away from, is he has documentation, proof of his bad trades. Okay, this is a very bad trade. He was long here, he added here, he added here, he added here, and he ended up having to close the whole thing right here. That's just terrible. He's buying as the price is going down, which is literally the opposite of what he needed to do here. And what he's doing is, as a way of training his brain, he's looking at those losses and saying, this could be you. This could be you. Don't get complacent. You could really F this up. That's an incredible technique. Incredible technique. So not only should you try and learn from your losses so that you can trade better in terms of what did I miss when I was reading the chart, but also if you look at your losses, and I do this as well, I have them printed out. And I'm going to take this as a reminder to spend more time reviewing those and say, this could be you, right? Those catastrophic losses. Remind your brain of the consequences that can happen when you don't trade well, when you're not at your best. And remind yourself that you're susceptible to errors. Because if you forget that, disaster is right around the corner.
It, as its core, it wants to protect you against pain. It means that it will protect you against remembering the losses because, hey, that's painful. So I am going to do the exact opposite by saying, fuck you, brain. I need you to remember how badly you can act when you're under stress.
That is so money. This is so gold. This is so gold. Everyone needs to write this down right now.
So don't you ever dare adding to a losing position. But what's the opposite of adding to a losing position? What's the very opposite behavior? It is to add to a winning position. And that's why we're doing it. It is not just that we make more when it's going well. It is also that we are counteracting the very things that our brain has a tendency to do to us.
And if you've read his book, okay, his book, again, is The Best Loser Wins. He shows there's an analysis that he was able to do over millions and millions of trades that showed that one of the key behaviors of losing traders is that they add to losing trades, just like this. And one of the key behaviors of winning traders is they don't add to losing trades. They only add to winning trades.
I don't want that. This is a stupid example. But it goes the same. I bought one of those smartwatches. It only cost me 20 quid because I don't need anything else. But I need to know, how quickly can I run 10 kilometers? How quickly can I walk 5 kilometers? Am I improving? And why am I just cruising? So everything in my life that I know of, I'm just trying to improve, because that's what I get a buzz out of, ladies and gentlemen. Mental improvement. I call it the Book of Horror. Can you see Jack Nicholson in here? He's like from The Shining. Anyway, my Book of Horror, and I've actually taken this from someone who gave me
the Book of Horror. Okay, so this is the collection of all of your worst trades. It's amazing.
These, it's not my own, not all of them, but it's just this is what I have a tendency to do, and I want to be reminded before the trading day starts not to act in the wrong way. I want to act in the right way. So solution part 2 for me is posing specific questions has enabled me to develop a much sharper edge in my trading, because I'm not embracing every single aspect of the game. Not every single aspect of it. What's the point in analyzing the FTSE in trading between 12 o'clock until 3 o'clock if you're only trading in the morning? It has to be specific to your particular circumstances. And furthermore, you also have to acknowledge and embed in your psyche that there is no amount of math, there's no amount of indicators, there's no amount of anything that can get you out of having to experience uncertainty. So if you want to trade consistently without the swings in confidence, then you have to learn to accept and tolerate, and perhaps even learn to celebrate the feeling of uncertainty by doing the very things that you don't like to do. Become mindful of the things that you don't like to do. Just like in an example, imagine you're going to a public toilet and there's 10 urinals. You're most likely going to, if it's all empty, you're probably going to find that you want to gravitate towards peeing at the one that is at the furthest left or the furthest right. So force yourself to pee right in the middle. Yeah, it probably means that someone can stand right next to you. But it is those little things that will enable you to living a life outside of your comfort zone. As it ain't as it sounds, but your behavior, if you become mindful of it, will present so many opportunities for you to learn about what exactly makes you tick and what exactly makes you run away. So the reason why I wrote Best Loser Wins was as much for myself as for anyone else. And the chapters in Best Loser Win reflects that. That charts are only a part of a successful trader's arsenal. And the curse of patterns is not every pattern is 100% successful, because we have a tendency to see what we want to see. And if we don't set our mind specific exercises from a charting point of view, we'll most likely not improve. We also need to learn to fight our humanness and act on the very things we don't like to act on. And only by being mindful of them and having a process, a review process, will you actually be able to achieve that. And maybe you need to drive yourself into disgust before you actually change your behavior. So back when I was a kiddie or youngling, there was a movie with Emilio Estevez called That Was Then and This Is Now by Hinton. It was a movie adaptation of his novel. So when I look at how I did trade, I traded small, I was scared. I traded DAX without knowing what I was doing. I traded the Dow with no strategy. I won a little very often. And then I lost a lot, once or twice. I suffered from the supermarket mentality. So when the Dow was falling, I would be buying.
Supermarket mentality means when the price is down, when the price is low, you think it's automatically a deal.
And buying and buying. I traded without a real plan. I celebrated wins, and I extrapolated how much money I was going to make if I continued making money like this. And I ignored the losing trades.
Okay, now look at this list. Everyone look at this list and you tell me in the chat right now, tell me in the comments right now, which of these are you doing? Be honest with me and be honest with yourself. Okay, this is an opportunity to do some work here to improve your trading results, but it can only happen if you have the courage and the willingness to be honest with yourself about things that you can improve. So which of these on this list are you doing now that you want to work on? Which of these? Okay, pick 2 and post them in the comments right now. Now, I'm going to underline this one. Ignoring losing trades as the most important one on this list. But you tell me, which two are you doing that you want to work on?
Well, let's look at how I am today. I trade fucking huge, and that's not my line. That's a broker that called me and he says, if you insist on trading fucking huge size, you can't trade at such tight spreads. So I changed broker. Well, that's another story. And I'm not scared when I trade big. I've developed index-specific strategies, so I know when I can trade the Nasdaq. I know when I can trade the DAX. I know when I can trade the FTSE. I trade the Dow, and I'm very respectful, like a surfer headed out to a raging ocean, because I know it can give quickly and I know it can take quickly. And I also know I lose often, but my wins are bigger. And I don't have an impressive win-loss ratio. But when I do smell a weak market, I smell blood, and I will add, and I'll add. Or like the Nasdaq trade that we did a few days ago. To me, that had all the hallmarks of all the research I'd done, and I was expecting new highs of the day. And we kept pushing and pushing and pushing, and we turned a losing day into a big winning day. So I trade with a plan specific to the instrument and the time of the day. And when I win, I don't look too deeply into it, but I do look. And when I am losing, I try to figure out, what could I have done differently? Was there something I did wrong here? So what I want to say is that slow progress is better than no progress. Remember that. Stay positive. Don't give up. Because if you really want this, all you have to do is to think differently than to everyone else. You are not the 90%. You're the 10%. Why? Well, because I'm training you. I'm guiding you. And I'm telling you what to do.
Okay, now, amazing video by Trader Tom. I want to give you 5 powerful questions to think about. 5 powerful questions to think about, because this is not just entertainment, okay? If you're here, you know I'm not just about entertaining you. I'm here about training and developing you so that you can expand and that you can see actual real results in your life, okay? But that's up to you. Your results are up to you. So what you do with this is up to you. But here are 5 powerful questions. The first one is, are you trading what you see, or are you trading what you believe? Most traders fight the trend. Now, you saw a very powerful example here of him fighting the trend, going against the trend, and it costing him horribly, okay? So, are you forcing yourself on the market, or are you seeing the market clearly and objectively, all right? That's question number 1. Are you trading what you see or what you believe? Question number 2. If strategies work 60% of the time, okay? If the best trading strategy works approximately 60% of the time, why do 90% of traders still fail? Huh? It's really not about the right strategy, is it? It's about psychology and discipline. These are the keys, okay? These are the keys. Number 3, is your trading education setting you up to fail? Is your trading education setting you up to fail? In other words, are you leaving out the most important thing, which is how you think and how you feel and strategies for managing that? Question number 4, do you actually review your losing trades or just try and forget about them? And as I said, I think that's the most important one. Learning from failure is what separates the great traders from the amateurs. Which one do you want to be? And question number 5, are you practicing deliberately or just repeating bad habits? Remember, the 10,000 hour rule is not enough. You can do the wrong thing and practice that for 10,000 hours and still suck. You have to actively challenge your weaknesses. In other words, are you working on your weaknesses? If you want more details on my strategy, I have a document where I show you my 3 favorite trades, which includes the pattern I look for, how I set my profit targets, and also how I limit my risk and set my stop loss. And if you want to get that download, go to the link in the description. It's tradesbybren.com/3setups. Like the video if you like this one, hit subscribe if you want more, and I'll see you in the next one. Thank you so much for watching. I appreciate you.